Money at Work Continuing Education Series. Today's episode centers around the 7 rules of the bank in terms of what are they, and more importantly, why we should care. Banks are notorious for telling us to do one thing while they operate in a 180-degree opposite rotation from that. So instead of doing what the bank tells us to do, we should do actually what the bank does, mimic their actions. So here are the 7 rules of the banks and why you should care. Number 1, banks are always in search of cash flow. You know, cash flow is the leading indicator of the health of any business, but banks specialize in identifying cash flow opportunities. Number 2, banks are always in search of interest, and they use us mainly to manufacture fractional credit spreads for themselves. They take in our money, pay us little to nothing for savings, CDs, etc. Then on the opposite side, they lend that out in terms of loans, credit cards, etc., and make the spread on that interest rate. So like a bank, we should be always in search of ways to earn interest instead of pay interest. Number 3, banks are always using leverage in the way that they operate. Now, we don't want to become over leveraged, and we saw what happened to the banks when they became over leveraged in the past, but using things like debt and capital to finance the operations. You can learn a lot in terms of personal finance by looking at the way that a bank actually operates. Number 4, OPM. Banks operate on other people's money. This goes back to some of the previous rules, but once again, if we look how a bank operates and we take that and translate that into our personal financial situation, the opportunity to use other people's money is one of the rules that we should adopt. Money back faster. Banks always want to get their money back faster. We should always mimic what the banks are doing. Anytime you have an opportunity to get your money back faster, rotate that, flip that, and continue, you should take that opportunity. Banks want to take guarantees. So once again, banks aren't in the business of speculation. We have seen what happens when banks speculate in the past, but mostly banks take guarantees. And when you look at how to grow your money and you look at the opportunity to take guarantees over compounded periods of time, it creates wealth. And banks are very good at that. They understand that. So we want to go from a speculator's mindset to one of a guarantee mindset. Yes, you want some part of your financial plan to be in speculation. That's a very top piece of the pyramid. And banks want low risk. You know, when they look at the landscape of where their money's going and what it's supposed to do in terms of return, they want a decent rate of return, they want the guarantee, and they want the low risk. So once again, the rules of the bank: want cash flow, earn interest, use leverage, other people's money, money back faster, take the guarantees, and they want low risk. If we can operate in the same mentality in terms of not only theoretical but practical application in our own personal financial situation, using the rules of the bank to bank like a bank has huge advantages. You want more advice, information, material on personal finance? MillionaireMindset.life. Stretch your thinking, create your vision, and achieve.